With inflation hitting above 3% this year, it's becoming extremely important to find additional income sources. While side hustles like affiliate marketing, e-commerce, social media design, all could help, they all have one common drawback. They take a significant amount of time to become profitable in. What if I tell you that there's a skill set that allows you to work 24/5 with no cap on your earnings? You don't need much to get started, and you could do it from anywhere in the world. All you need is a computer and Wi-Fi. Imagine the possibility of earning more in a single day than you do in your whole month at your full-time job by dedicating just 2 hours a day to mastering and applying the skill set. This skill is called day trading. Now specifically, I day trade Forex, which is short for the foreign exchange market. It is pretty much buying and selling currencies at different exchange rates to benefit from the price difference. It is the world's largest financial market with trillions of dollars traded each day. In simple terms, you trade one currency for another, hoping to benefit from their shifts in exchange rates. For instance, you might sell Euro USD, hoping that the euro will gain strength over the dollar. I was once in a position where I needed a side hustle, which led me to Forex trading. After 6 years of trading, I've achieved an incredible lifestyle and remarkable results. For the past year and a half, I've been teaching others how to trade for free. And I've had students like Anthony make over $34,000 in one single month after taking a class with me. I've previously shared how to get started with Forex trading, but today I'm going to show you how you can make money from trading. So the first thing you got to do when you come to sit down and analyze the graph in the morning is you want to start on the higher time frames and identify where the market is actually at. So you want to start on the higher time frames. Even though we're a scalp trader, we like to start on the weekly time frame and identify where the market is actually at and heading. So the way that we draw our supply and demand zones on the higher time frames and we identify where the market is at is we look for these big impulses and these big pushes in price. So for example, we have this big distribution to the upside. We could identify that we have an area of demand right here, which would be a weekly demand. This is weekly. We would mark this right here as well. Weekly demand right here, weekly. So we have these two. And we have the third one, which would be down here, which is the true area of demand that created the impulse to the upside. Now, why did we mark these three? Because this is the true one here that created the push to the upside, but these are the first two main targets for price. So when price starts coming back down, these are going to be the first targets for price. Price has to break past this area in order to go to the next two. So now an area of demand is pretty much an area where a lot of volume left to the upside. So demand would be an area where we buy. Supply is going to be an area where we would sell from. So pretty much look at the area right here. We mark the demand. It's the previous contrary candle. So the key rules, guys, to mark demand is it is the previous contrary candle before a push to the upside. So if it's a push to the upside, a bullish push, the contrary candle would be a bearish candle. So the contrary bearish candle before the push, that is your true area of demand. So notice we have these three marked here. Now we're going to go ahead and work our way down to the daily time frame because there is no area of supply on the daily time frame. Here you could identify that there's also no daily supply here. So what could we do? We could just keep marking our daily demand, which is going to be this one right here. We'll mark this one right here. And we'll mark this one down here. So notice how these zones are in confluence, daily, weekly. And then, like I said, once price breaks past this area here, we could anticipate price to come down over here. Now, this trade that I'm breaking down, it was called live in the signal group. So keep that in mind, guys. It's one thing to break down a graph and it's another thing to actually call it live. So just know what I'm breaking down, I call it live. Now we go to the H4. On the H4 time frame, we could identify supply. Finally, we could identify supply. On the daily, there was no supply. But here on the H4, there is. So we have this previous contrary candle before this push to the downside. This is an H4 supply. Then we also have this H4 supply right here, H4 supply. And we have our targets, which are going to be these right here. We have H4 demand, going to be our first target for price. And we also have these over here. H4. So once we get our targets marked on the H4 time frame, we could identify, notice how price is finding demand. We're pulling back, finding demand. And as we're doing so, price is giving us a clue that price is going to keep going to the downside. What's the clue? Look at these equal lows here. Whenever you have equal lows or a double bottom, that is an indication price is going to take out this area. So we're going to go ahead and mark this as equal lows. And notice price is simply finding supply to continue to the downside, which is going to be this area here. All right, so we mark these equal lows here, guys. Now, equal lows is like a double bottom. It could be a double top, triple top, or whatever. The point is, it's retail supply or demand. A lot of people see this and they would mark this as demand, but this is wrong. This is incorrect here. This double bottom is not true demand. Our true demand we know is one candle, previous contrary candle before the push. This right here, 100%, like 90% of the time, the market will always break past this area and do something like this and head to the actual target, or it will use the double bottom for a fake out like this, and then you'll get something like this. Which you could see it literally right here. You guys can see it pretty much here. Double top, price gives the true supply, and then the distribution. So whenever you see something like this, you see it here, more than likely price will always break past it. So 90% of the time, price is going to break past this area. So this is just a clue letting you know that price is going to break past here. We're simply finding supply to continue to the downside. Now, so keeping that in mind that we're finding supply, notice how we have an H1 supply right here. So we mark this right here, H1 supply up here as well. And then now we turn this on. Now we were trading New York session, right? So New York session, when we come to sit down to trade, this is what we are presented with when we come to sit down to trade. So if this is what we are looking at, what do we have here next to the equal lows? We also have an M15 demand, which is coming right here. There's just something to keep in mind. Now, if price is finding supply, guys, right? The first target for price as far as supply goes is going to be this M15 H1 supply up here. So price very likely is giving a pullback into supply. Like I said, notice the void to be filled. So price could do something like this. This is what we're anticipating right now. Price needs to pull back into supply to then continue to find demand over here. So this is what we're anticipating right here. Now, when we go into the lower time frames like the M5, we turn on the session-based indicator. We let price do its thing. We trade New York session, right? So if we're trading New York session, just keep in mind this. Let's mark this right here. Let's mark this M5 right here. M5 demand. And let's see what price does. So New York session opens. Now, what does price do here, guys? Check this out. Price on the M15 time frame, what do we have? Price creates, check this out, an M15, an M5, and an M1 demand, all in confluence coming from this area right here. So 3 time frames in confluence. We have the higher time frame target right here. So I sent a buy limit off of this area. Now check it out right here. Price went a little bit too fast. But pretty much we have our session creating this M15, M5, and M1 demand. What's an area of demand? It's the previous contrary candle before the push. So look at right here, previous contrary candle before the push. You have M15, M5, M1. I sent a buy limit off of this exact area like this. Looking with these parameters here. Something like this. Notice price pulls back into it. Boom, activates our order. So activates our order right here. And then I'll show you guys where I told everyone I was closing. So price creates this M1 supply right here. And then as soon as price comes into this area of supply, I let everyone know that I was closing because it's Friday, it's 2 o'clock. And we had pretty much 2% secured off this trade, which is about $25,000 that we secured off this trade, which was right around there. So boom, right here, we told everyone to secure the trade. We secured almost a 1 to 2 off this trade, super solid. And then those who did not listen to me, you could tell, or you will see that price is still in profit. You can see that those that didn't listen to me are still in profit, but price is stuck in this range. More than likely, we're going to see price come back into this area of supply as soon as the market opens, and we'll continue the bearish move off this area. So pretty much you guys can see the risk to reward here was a 1 to 2, meaning that we were risking 40 pips to make 80 pips, which means that we're going to gain twice the risk to reward, meaning that we're going to make twice as much that we're risking per trade. So if we're risking $1,000, we're going to make $2,000 because our risk to reward is a 1 to 2. Now, keep in mind, for example, if our risk to reward is a 1 to 3, meaning we're going to make 3 times the amount that we're risking, you could literally lose 7 trades and win 3, and you'd be up 9% with those 3 trades that you won because you won 3% off of each trade. So if you win 3 trades with the risk to reward that it's a 1 to 3, you could lose 7 and win 3, and you're still positive. Now, if you guys want to be part of the exclusive group that I called This Trade With Live, and that receives daily analysis and breakdowns and high probability trades with precise entries, this is the same group where I had a 23-week winning streak by sharing these insights. To join and get all the details, click the link below and you'll receive more details. Make sure to leave a like, comment, subscribe, and I'll see you guys in the next one.